stocks had a monster move into the close today. And this is really important because we don't want to miss or forget that tomorrow, March 28th, is going to be the end of the week, the month, and the quarter. But not everyone thinks this market is really bullish. Here we go. JPMorgan says that stocks are so crowded, they may crack at any time. But what does this really mean? It means that we're taking the staircase up, and at some point, we could take the elevator down. I've already been warning you for a number of days, but the warning I want to give for you tomorrow is that what could happen again, keyword here being could, is that tomorrow at 4 p.m., we're going to have rebalancing, which means that all of the big money managers are going to decide what they want to hold and what they want to sell. So at 3 to 4 o'clock tomorrow, it's going to be a very important time. And we've already went through and talked about the warning signs that we noted going back to September of last year, which are now starting to repeat here. But I want to leave you with a simple message because headlines like this tend to get people scared, right? There's more risks of hovering in the background, strategist says. Okay, cool. Yes, we know we can take the elevator down. We also know we're going to get warning signs before we go there. But just before we go to the next section, which is basically going to be looking through the key dates for today, rounding it out by looking back at the notes, and really just getting ready, I want to tell you exactly what this means. So if we look here, let's understand what's been crowded, because those are the charts that are really going to matter. If we look back to the last 1 year or the last 12 months, man, it looks like everything's crowded. Just looks like the market's bullish. So what does that mean? Everything's crowded? I don't really see it here. So I think what we need to do is to zoom in a little bit. Let's look here to year to date. Well, is it still crowded? Well, I see one stock that's crowded, NVIDIA, up by 83%. What else is crowded? I don't really know. Eli Lilly, 34%. So, I don't really understand what they're telling us here, right? They're just being scared, right? JPMorgan being a bunch of babies. Unwind risk. Okay, cool, right? Staircase up, elevator down. Oh, their end of year target is 1,000 points lower at 4,200. No wonder. They're like, we're not going to revise our target. We're bearish, and that's what we think. We think we're going to drop 1,000 points between now and the end of the year. Cool, right? That's JPMorgan for you. All right, before we go further, I'm going to ask you for a huge, huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly, greatly appreciate that. All right, so without wasting any more time, now we know that they're saying stocks are crowded. I don't know which ones, but they're like, hey, we got to find a way to get down to 4,200 somehow because that's our target. And we're inflexible. We're not going to move. Cool. So at some point, we can take the elevator down, but it actually looks like we're taking the elevator up recently. Why? Look at the heat map. In the last 1 year, like I mentioned, everything's booming. Even Apple, stinky Apple, which has even bad news out as of yesterday, is rallying. This is so interesting. So if it's crowded and on bad news, iPhone shipments in China fell 33% in February, state data shows. Well, Apple's still pretty resilient in the last 12 months. Yeah, NVIDIA's up 240, Google's up 47, Microsoft 52, Meta 146. So I think what they're really saying is that the Magnificent Seven, right? The Blazing Two, whatever we want to call it, those are the stocks at risk. So as we're going into that quarterly rebalancing, that's really important. Now let's just take a quick step here to recognize what is going to happen between now and the end of the month, even though we're not going to get a trading session on Friday. It's going to be a holiday. So tomorrow, we're going to get the close of the weekly, the monthly, and the quarterly. I'm going to go back and focus on monthly charts for the stocks we just talked about. Tomorrow at 8:30 a.m., we are going to get a revision to GDP and initial jobless claims. I'm not sure if the market's going to move on this, but if we look here to the forecast, we're going to be getting a revision here from 4.9 down to 3.2. And that is actually interesting because that is much closer to where the GDP now from the St. Louis Fed has been. Let me just see if I can pull that up here. So if we have a look here, we note that going back to the last quarter, it told us 2.3. So even coming in here at 3.2, maybe it has to get revised lower even again one more time. So I'm not sure, but we note that we're still positive. So even though a lot of other countries like Canada are going into recession, maybe they get GDP that's positive, maybe they don't. The US has been so strong. And we're also going to get initial jobless claims. And if it comes in higher than the previous reading, this will likely be positive. Why? Hey, Fed people losing their jobs is good for the Fed. And what's good for the Fed is good for the market. And then on Friday, we're going to be getting core PCE. Core PCE is going to be stuck here at 2.8, but the month over month number is going to come down to 0.3. This is good. It's showing progress. Is it enough? We'll see what the market votes on. All right. So that's going to be the core PCE, or the number one data point for the week. But we won't be able to trade on this until Monday, April 1st of next week. So we're also going to have Powell speaking tomorrow at 11:30. Let me just double check that. Let me pull up the economic calendar. There we go. Let me go back down to, let's go to this week. And then on Friday, Jerome's going to slide right in there at 11:30. And I'm not sure if there's going to be major headlines, but he's speaking at a G20 summit in San Fran, which could generate some news. So like I mentioned, tomorrow we're going to be live for the last hour. So maybe you want to subscribe to the channel or come hang out with me at 3 p.m. tomorrow as I can walk you through these charts in more detail. So very simply put, we're looking at two charts to start. We're looking at SPY and QQQ, but then we're going to go through some other important charts as well. So tomorrow, we're likely going to close above 511. I don't see why we won't. We could get a power flush into the close on rebalancing, but I don't see evidence of that as of right now. So into next month, the question will be whether or not we can actually form a monthly higher high. Right now, the S&P is so bullish, it's just a matter of how bullish. And as a quick reminder, we're looking to a pattern going back to 2020, which tells us that we could be going higher for like 6 more months. It could be a long time until we get a notable correction. So JPMorgan might have to cave and raise their target. If we now look here at QQQ, or the Qs and the NASDAQ, oh, that's not QQQ. Here we go, QQQ. We're also back above our previous monthly high or key resistance at 441. That's really important. And then we have another hollow candle, which means another expansion. The NASDAQ does look a little bit softer. It's only up by about 1.3 on the month, when SPY is currently up by almost double. And remember, the saying is that chips lead tech and tech lead SPY. So if S&P is the number one gainer, what's been happening in the last month? Well, that probably matters because that's where the strength is coming from. It looks like it's almost everything. Ironically, some of the biggest stocks are actually the ones that suck. Apple, Tesla, UNH. And what's so interesting about this is that I noted Apple and Tesla specifically here. They are deeply oversold. Can they shake off bad news and rally? We're going to find out. And if nothing else, we want to see what happens with option premium being burned, because Apple's up 2% on the day, and so is Tesla. They got to burn those puts, right? It's been 30 days. They got to burn them. So let's see what happens. But if now we go back here to monthly candles, let's look at SMH, or chips. So chips are up by 6% on the month. So chips are leading, even though they're off their high. And that's going to be very, very interesting. If we now look here to a few other key charts that really rallied really strong into the close, those were things like the Dow. The Dow rallied really hard. But actually what rallied even harder was things like IWM. That one's up by 2.1% of the day. And the things that I'm noticing that got bought up would do really well if interest rates went down. That is things like home builders. It's things like TAN, which is a utility. This is a solar ETF for utility stocks, basically solar stocks. Financials are up, right? Utilities are up 2.8. Man, it looks like there's a bull market. KRE, or regional banks, it's booming. So the key charts that I really care about are going to be RSP, or equal weight S&P 500, up by 3.7% on the month, beating the NASDAQ, beating the S&P. And then also Bitcoin, because this one's been flip-flopping like a flapjack, above and below 69,000. Before I hit record, it was below, and now it's just back above. So I left a lot more notes on the weekend review. That's now queued up here on the left-hand side. If not, maybe you want to subscribe and come hang out with me at 3 p.m. tomorrow. Thank you so much for tuning in. I'll see you tomorrow.